Happy Tuesday. It's the best days of the week as far as I'm concerned because today Collective is hosting a Tax Tuesday. And essentially what it is, it's an AMA, surrounding taxes, best business practices, best financial practices, best accounting practices. Um, I'm here to answer all your burning tax questions. Tax, of course, is one of the most interesting topics in the world. So we're going to have a blast today. And before we kind of go further, let's get the legal stuff out of the way. And just to be clear, what I'm getting ready to discuss is just information. You know, don't consider it, official tax advice. Don't consider it legal advice. I'm not giving any sort of legal advice. The tax code is very complex, and it might not apply to you. I could be wrong in the things that I'm saying. That's been known to happen. So before you do anything official with your business, go speak to a tax accountant or tax attorney or some tax professional like that. But since we got that out of the way, we might as well go ahead and jump into some questions. Some riveting tax questions, and the first one rather is an excellent question. What are the best things to do to set up an 18-year-old new entrepreneur up for success? That is such a good question. Let me think about that. Someone starting a new business, especially when they're 18, I would say one of the most important things is to either outsource the accounting, outsource the bookkeeping, or make sure they know how to do it. Make sure they know, how important the bookkeeping is, the accounting is of into things, because that's the issue is that when you go throughout the year and you're running a business, you have a lot of transactions, you're doing a lot of business, you're making money. In the background, there's this mass of just financial information that is just begging to be organized. And the problem is when you get at the end of the year, if that's not organized, then it's hard to know how much taxes you owe because you can only calculate your tax if you have an accurate financial picture. If you have an accurate net income, after you've written off your expenses and whatnot, that's really the only way to kind of calculate your tax. But you can't, file your return until that stuff is done. And sometimes when people get at the end of the year, they just kind of ignore it. Some people do, and they don't file a return. And then 3 years down the road, the IRS sends them a letter and said, "Hey, where are your returns?" And they've got to spend, $6,000 in getting it all cleaned up. So that is one of the most important things is, make sure that the 18-year-old knows how to do bookkeeping, and if not, outsource it. Is there a way you can lose your S corp status? Ooh, another great question. So in S corp, I'm glad the question was asked that way because that's accurate. It's a tax status. It's a tax election. So before you're an S corp, you have to be an LLC or some sort of business entity before you can make an S corp election. So that's the first thing. But in terms of the question, can you lose your S corp election? Yes, you can. So first of all, there can only be S corps have some restrictions. And the first of all is there can only be up to 100 owners, 100 shareholders in an S corp. You can't have more than 100 people that own a portion of your business. So that's one thing that could make an S corp not be a thing anymore. Also, you have to be I believe the term is you have to be a permanent resident of the United States and usually pass what's called the substantial presence test before you can even make an S corp election. And the substantial presence test is essentially if you're a non-citizen and if you've been in the US for a certain amount of time, the past 3 years, or something like that, then you are then qualified to make an S corp election. But that can be complicated, and definitely talk to a tax professional for things like that. Do you still have to pay estimated tax deposits with an S corp? Yes, you do. Yes, you do. So this is how it works. With an S corp, you pay yourself a salary. You know, a portion of your earnings that you make from the business comes to you in W-2 salary. So just like it does when you have a W-2 job, when you work for somebody else, taxes are being paid out of your salary. They're being deducted. So as you have this S corp salary, some taxes will already be paid to the government, to the IRS. But let's say that there's some additional taxes that don't get paid with your paycheck deductions or anything like that. Then yes, you need to pay that difference via estimated tax deposits. So you still have those requirements when you're an S corp. What's the most important thing to know about taxes this summer? Oh, well, it's interesting because I think the summer is when people kind of get lax on taxes, because it's so far away. I don't have to file a return, until April of next year. So why should I worry about it here in July? I'm on the beach, drinking mocktails. I don't need to worry about taxes. Um, I would say the kind of the risk for that kind of mindset is you need to worry about it now so you're not freaking out, closer to the end of the year or closer to filing your return. So, yes, you don't have to file anything currently, but the most important thing to keep in mind is that it's a good idea to remain organized currently. You know, it just makes it so much easier when you get to the end of the day and you file your return. Or I'm sorry, when you get to the end of the year and you file your return. So you just keep that in mind. Keep organized, even when there's not stuff due. Does this live stay in your Instagram feed? Yes, I believe it does. I believe that we'll have it just as a permanent post there to where you can go to our page and access it. Who all can make an S corp election? Well, there's several entities that can make an S corp election. One are LLCs, both single member LLCs and multi-member LLCs. And multi-member LLCs, that's just another word for partnerships. That's literally what a multi-member LLC is. So when you have two or more people on an LLC, that's considered a partnership. However, both of those type of entities can make an S corp election. A single LLC can make one, and a partnership can make one. So those two can, and then also a C corporation can make an S corp election. Um, and that's what's interesting. And I think there's a lot of people that have a misrepresentation about what an S corp really means, because they automatically assume that an S corp is a corporation, because it's in the name, of course, but that's not necessarily the case. Ooh, here's an excellent question. How many years in a row can you file a loss for an S corp? Well, honestly, I'm a little rusty on if there's actual rules around this. I'm not sure if there's actual rules, like if there's like some sort of like objective number of years that you can file as a loss. But I do know that if you consistently have losses in your business, the IRS could suspect that your business is actually a hobby instead of a legitimate business with a profit purpose. And the thing is, there are some people that will use hobbies and will act like it's a business and will write off expenses that they're spending on their hobbies, and they'll write off business expenses, which will reduce their tax bill and other income sources. That's a no-no. The IRS doesn't like that. They say if it's a hobby, then you can't write those expenses off. Those are money that you spend, um, in a personal capacity. So keep that in mind. That even if there isn't a rule, which I'm not really sure on that. I'll have to go back and look at the tax code. But even if there isn't, there's a risk of continued losses. The IRS classifying your business as a hobby instead and disallowing your losses. Oh, what's the best way to calculate an S corp salary? That's an excellent question. And let me get into a little bit about what S corps even are and what it means to pay yourself a salary. So, when you make an S corp election, say on an LLC or something like that, essentially what it does it turns you into an employee, of your own business. So, since you're an employee, you pay yourself a salary. You know, a portion of your earnings will go to you in W-2 wages, just like you'd get paid if you work for someone else, as a W-2 employee. But the advantageous thing about S corps is that the only chunk of your earnings that's subject to the self-employment tax, the 15.3% self-employment tax, is your salary amount. Whereas before, it was either a huge chunk of your net income or the entirety of your net income is usually subject to that 15.3%. But with an S corp, it's only your salary. So let's say that let's say that a business nets $100,000, and let's also assume that you pay yourself a salary of $40,000. Let's assume that first $40,000 is still subject to the self-employment tax, the 15.3%. The other $60,000 is not. You know, that chunk of money is considered a distribution to yourself. And it's just simply, no longer subject to the self-employment tax. So, you can save, quite a hefty sum on that chunk of money. And to get back to the original question is, what's the best way to calculate an S corp salary? What's the best way to calculate your salary? And what the IRS says about the salary is that it has to be reasonable. So, there's a lot of people that ask me, well, if I'm only subject to the self-employment tax on my salary, then why not just pay myself, like $1 in salary or a really low salary to, kind of avoid the self-employment tax? And my response is because you have a much higher likelihood of getting audited, unfortunately, because the IRS doesn't like that. So keep that in mind. But back to the question. I'm sorry, I keep trailing off and I keep rambling. But the salary amount, like I said, it has to be reasonable. And there's several ways to kind of calculate an S corp salary. There's some people that use a weighting system, and it has things like area of the country you're from, how many hours a week you work in the business, how many years of experience do you have in the business, what are similar professionals in your field and similar sort of caliber of experience, how much money are they making in their profession? So all of those have to do with kind of coming up with a reasonable salary. But if you came on board with Collective, then we would actually give you a salary recommendation, you know, and that's a big value because you're not left guessing, what's it's considered reasonable and what's not. Okay. I only make 65,000 rather in my business as an S corp. If I pay myself a $35,000 salary, is that okay? I feel like I'm not big enough to split my revenue like this. Well, let's see here. So if you're making, first of all, I cannot tell you if that's reasonable. I cannot give you advice. Like honestly, I have no idea. I'd have to look, for closer at your situation. But just kind of a rule of thumb, $35,000 of $60,000 or $65,000 is 53%, approaching 54%. And usually, kind of a good rule of thumb for a salary amount is there's a lot of salaries that are coming out around 40%, you know? So just in general, like statistically speaking, a 50% salary is usually acceptable. But again, it's not, that's just a rule of thumb. The salary isn't calculated based off percentages. It's calculated based off an argument to the IRS that you can make that this salary is reasonable. It's not just a percentage. So keep that in mind. Ooh, what are the best industries to elect for S corp status? One of the best industries, in my opinion, to elect for the S corp status is the consultant industry. You know, someone that provides a service. Freelancers, consultants, people like that, marketing consultants, software engineers, tech professionals, professionals like that. An S corp is something that they should at least consider. And one of the reasons that is because a lot of times, unfortunately, those sorts of industries don't have a lot of business expenses they can write off. You know, they're working from home. They're not necessarily traveling a lot in their business. They're not, manufacturing products. There's no expenses there. They don't have a facility that they're working at, so they don't have any, sort of outside rent. So there's just not a lot of expenses in those industries. So there's less tax write-offs. In other words, there's just less to write off in taxes. So the good thing about the S corp election is that it saves you in taxes not by writing off expenses, but by paying yourself a salary. So, the more money that you have, theoretically, the more money you'll save with an S corp. Okay. Why would a C corporation want to elect the S corp tax status? Um, well, for one, like I mentioned earlier, there can only be up to 100 owners in your business if you're an S corp. And that doesn't work with every business situation. Some people want to fundraise. Some people want to have a lot of people that have an ownership interest in their business. So sometimes the S corp structure doesn't work, and that's where a C corp structure comes in. A C corp structure, you can have an unlimited amount of people. Um, well, technically only around 7 billion because that's only the amount of people in the earth. But you can have a huge amount of people that have an ownership in your business. Okay, and I think someone is asking a question right now. When do you not want to make an S corp election? That's a great question because sure, I mean it's worth noting that only certain individuals need to make an S corp election. It's only worth it in certain circumstances, and that largely depends on your income, on how much money you're making. And if you're making, and this is a collective number, we give a general suggestion of around $60,000 net income. And the reason we say that is because the amount of money that you can reasonably expect to save with an S corp at around $60,000 is making it worth how much you're paying collective or how much you're paying to, kind of sustain the S corp. But, kind of as you drop below that mark, and if you make a little bit less money than that, eventually you'll be paying more money to us than what you'll be saving. So it's not really worth it to go the S corp route. So, if you're just kind of a new business and you have no idea how much money you make and you think it'll be a little bit low in your first year, then it might be a good idea to hold off on the S corp election. Oh, this is interesting. I have a side hustle that involves flipping free products I find in my neighborhood to sell on Facebook. Would this business structure be eligible for an LLC? Sure, it would be. I don't see why not. And essentially, you have kind of almost like a restoration business to where you find free products, products for free, and you sell them, and you can write off things like traveling to acquire these products, rent, getting them, bringing them back to life. My brain is blanking on what that even is. So yeah, that would be eligible for LLC. All righty. Can I pay my kids a salary? Well, I mean, sure, you can pay your kids a salary, but here's what I'd say to that, because a lot of people ask me that question, and a lot of people are interested in that. It's sometimes you got to ask yourself a question: is it worth to do something with the IRS? It's not. It isn't always, because yes, you're technically allowed to pay yourself or to pay your children a salary, but it's pretty strict, and you're only supposed to do it when your kids are actually working for you. You can't just, play make believe and like just kind of claim to the IRS that your kids are working, and you pay them a salary to take advantage of the tax code, and then your kids aren't actually working. The IRS would have a problem with that. That's not compliant. So, and if you ever were to get audited, then you would need to prove that your kids are actually working for you. So just keep that in mind. Um, and a lot of times when family members are on payroll and things like that, it has a chance to maybe increase your risk for audit. So keep in mind that there's sometimes it's just kind of like not worth it to do certain things. You know. How can collective help a business that isn't a good fit for the S corp election? Well, I guess because before someone signs up for collective, they have a call with a tax advisor or with a business advisor rather. And they'll kind of go through the situation, see if you even need to be an S corp, and if not, we'll point you in the right direction. So you could at least get the value of, maybe getting a good referral or kind of getting pointed in the right direction. So we can at the very least do that for you. All righty. Ooh, here's an interesting question. Why collective? What's so different from the competitors? Well, I would say the region where collective really shines is convenience. Before collective, especially when you had to go to a brick and mortar CPA firm or some sort of tax firm like that, you usually have to have several different softwares. A payroll processor to handle the payroll with the S corp, a bookkeeping software to handle your books. Then you usually have to have a bookkeeper to help you with the books. Then the CPA would file your S corp tax return at the end of the year, and it was kind of a logistical nightmare. But collective, and kind of the point behind our name, the point behind our sort of purpose here, is to rope all of that into one company. Have your professionals, have your softwares, and have one platform that handles the entirety of your business and the entirety of your S corp. And before us, there was just a lot of piecemeal happening, and it's much more convenient. Also, one more thing to add, I would say the cost efficiency as well. Collective is very cost efficient. And when you think about it, let's say that you were doing your S corp by yourself and kind of doing things piecemeal. For one, you need to have a payroll processor. You don't want to run payroll by hand, believe me. And a payroll processor could run you around $60 a month just in the payroll processor. So that's one thing. Then you still need an accounting software. So that could very well be another $50 a month. That's $110. Then at the end of the year, you need to find an accountant to file your returns, to file your S corp tax return rather. And that's a complicated return. They can charge a lot of money for that. So at the end of the day, it becomes extremely cost effective to where you're paying generally the same amount of money that you'd pay if you did it by yourself. So, something to keep in mind when you're thinking about the price. Oh, as a freelancer, my income varies. Some months I make a lot of money and some months I don't make any money. How does this work with an S corp and paying yourself a salary? That is an excellent question. And thankfully, the salary, so you only need usually you only need to pay yourself a salary when there's actually money, flowing to the business that allows you to pay yourself a salary. Like if there's no money there, then typically you don't have to pay yourself a salary. So if there's certain months to where there's no money flowing to the business or you have a loss, then for that month we would just skip your salary. You know, so thankfully it's flexible and it largely has to do with how much your business is making. What can business owners do to keep themselves ahead of the curve this tax season? Well, for one, make sure your estimated tax deposits are in order because I think that's one of the main issues that burns a lot of self-employed individuals is if you haven't been making your quarterly tax payments at the end of the year, you can have a huge tax bill, and that can be scary. Um, Another thing is to keep up with your accounting, keep up with your bookkeeping because at the end of the year you need to file your tax return and you need to put organized accurate financial information on that tax return. You can't do that if your bookkeeping isn't organized. So those are the two I think main things is make sure you pay your taxes and make sure you keep your finances organized throughout the year. If you do those two things, it's pretty easy to file. Okay, and I think I have time for one more question here. And I think someone is typing a question as we speak. Can a can a nonprofit be an S corp? No, typically not. Like if you don't have actual profit, or if you're a nonprofit, there really wouldn't be a reason to make an S corp election. But that's all the time that I have this week, and it was a pleasure, like always. And please, if you found this information helpful, um, you might want to consider going to our website and scheduling a call. And see if an S corp or collective might be a good fit for your business.